everyone, I'm Ayşe Gülistan and this is Invest in Türkiye Talks. So what are we going to do throughout these series? We'll be talking everything related to investment, from FDI inflows to entrepreneurship, the investment infrastructure in Türkiye, and trends and challenges that sectors may face in the near future. I'm here today with Murat Onuk, who is the managing partner at Arz Portfoy. Murat, welcome to the podcast.
Thank you.
Now, Murat, before we start talking about Arz Portfoy and the investment climate in Türkiye in general, let's begin with you. You've held several high-level positions at different companies and organisations. In addition to your current role as managing partner at Arz Portfoy, you're the vice chairman of the Venture Capital Council of the Union of Chambers and Commodity Exchanges of Türkiye, and you have a lot of other different roles as well. So can you walk us through your journey? Where did your professional life start, and what milestones do you think that have shaped your professional life today?
First of all, I want to thank you for inviting me here to this podcast. I think you guys are doing a great job in doing this podcast for the investment area in Turkey as well. So if I would talk about myself, my professional journey has been shaped by diverse experiences that have laid a solid foundation for my role today at Arz Portfoy. The first phase was centered around my own ventures in the IT sector, and I was fully immersed in growing these companies, managing everything from sales and marketing to product development. And of course, this period gave me a first-hand experience in entrepreneurship, where I quickly learned, the importance of agile decision-making and the immediate impact of our choices, which taught me a lot about management and leadership. And in the second phase, which took me to Microsoft with responsibilities across both Turkey and global markets, based partly in Istanbul in the beginning and then in Redmond, Washington. This role expanded my strategic outlook and honed my skills in business development and management within a rapidly evolving technology landscape. I gained insight into complexities of international markets and learned how to drive strategy in dynamic and high-growth environments. And last but not least, for the past 8 and 9 years, I've been a managing partner at Arz Portfoy. Actually, we also call Arz Portfoy as Arz Asset Management. Following a few years working at Türk Telekom Group, responsible for marketing and various companies. At Arz Portfoy, I think I bring together my background in business development, strategy, marketing, and sales to add value to companies we invest in, focusing on sustainable growth and long-term success. The lessons I've learned through each of these phases guide my approach at Arz Portfoy, from strategic decision-making to identifying the right investments. I believe this experience is a significant part of why our investments thrive today. In our business, I again believe that you have to be a very multidisciplinary person to succeed in investments.
And from what I understand from your background, you have that multidisciplinary approach.
Yes, maybe a lot multidisciplinary, I should say, yes.
And tell us about Arz Portfoy. What kind of investments do you specialize in, and how many companies have you invested in until today?
Well, we are one of the leading alternative asset management companies in Turkey, focusing on private equity, venture capital, and real estate investment funds. When you look at the private equity investments, they are centered on established fundamental industries in Turkey that demonstrate steady growth and resilience. We prioritize sectors such as energy, mining, and food, where strong market fundamentals and long-term potential provide reliable returns for the investors. And our strategy includes working closely with companies to improve operations, drive sustainable growth, and enhance their market positions. That was the private equity. In the venture capital arm, it takes a proactive approach to support innovation and growth in early-stage companies, as you know. We focus on startups with proven product market fit and scalability potential, and scalable business models that can achieve rapid growth. On the real estate side, just to give a quick overview, we deal primarily with large-scale commercial properties. That's our strategy, including office buildings, warehouses, and shopping malls. If you look at the growth terms, in terms of growth, we've increased our assets under management to $400 million, with $250 million dedicated to private equity and venture capital. We have launched 30 investment funds, 30, including 20 of them focused on venture capital and private equity. So far, we have completed 43 investments, with 14 of them in private equity and the remainder in startups, including 10 of them made in 2024 alone. So we've been very active in the last year. We also acquired stakes in renewable energy portfolio with an installed capacity of around 150 megawatts. We have achieved 3 successful exits, 2 in private equity and 1 in venture capital. And our client base has grown significantly, including both institutional and individual investors. We have also delivered, I think this is an important number, we have also delivered a weighted average IRR of approximately 70% across our venture capital funds, which is well above the sector average.
Now, Murat, you mentioned that you were really active in 2024. What's the reason for that?
Well, actually, there may be 2 reasons. If you look at Arz Portfoy from one standpoint, we were also a startup and we are growing our business and our team in a very fast way. So that's why now our team is bigger, larger, and we have several industry veterans as well. So we have much more bandwidth in order to talk with startups and understand their businesses and also make the investments. And also our credibility increased in the last years because of our former investments. So now there are more eager investors to invest in, especially in venture capital together with us. And also we made some partnership agreements with very esteemed organizations such as Teknopark Istanbul or Bilişim Vadisi, which they are technoparks in Turkey. So that's why we've been a little bit more active in the venture capital area in the last year.
And I'm sure that that's going to grow over the next couple of years.
Yes, inshallah. That's what we believe.
Now, my second follow-up from what you mentioned how you're active in different lines of funds, and these were venture capital funds and especially real estate funds as well. Can you tell us what the differences are between these? So the advantages and disadvantages, because you don't only specialize in one specific area. So sometimes we have, for example, guests that come on the podcast who are significantly specialized in deep tech or a specific area of technology, but you're here working with in different industries, different climates with these funds. So how would you describe the balance between that, and what advantages and disadvantages do they come with?
It's a great question. In Turkey, actually, the legal framework for making investments in venture capital, private equity, and real estate portfolios, I think it's laid very well. So that's why one asset management company, if you can establish the right teams, with the right amount of experience, right amount of motivation, so you can deal with different types of funding as well. So if you look at the private equity, venture capital, and real estate funds, in Arz Portfoy, while all of them serve the goal of generating returns for investors, as you said, they do so in quite different ways. So they separately meet the needs and preferences of our investors. For example, one is investor at the same time can also invest in venture capital and also in private equity. So if I have to start with the private equity funds at Arz Portföy, they target high impact investments in established sectors like energy and food. By acquiring significant stakes, we gain control to directly shape operations and strategy, driving growth that yields returns through both dividends and capital gains. While PE funds require longer holding periods, typically 5 to 10 years, and face strict regulatory oversight from Turkey's Capital Markets Board, this hands-on approach allows us to build substantial lasting value. And in essence, PE is about creating significant long-term returns by combining strategic influence with both dividend income and capital appreciation. So this is a different asset class, actually. So when you look at the venture capital funds, these are designed to invest in startups and early-stage companies, particularly in high-growth sectors like AI, aerospace, and fintech. So the key advantage here is the potential for substantial returns if these companies succeed and scale rapidly. But of course, this also comes with a higher risk, as many startups may not make it. And typically, it requires a longer investment horizon before seeing any return. So from a regulatory standpoint, we see funds in Turkey are governed by the Capital Markets Board, which provides a framework that balances investor protection with the flexibility needed to support innovation. And lastly, if you look at the real estate funds, they are more about stability and security. These funds invest in tangible assets like commercial or residential properties, in which we actually specialize in commercial properties, which generally offer more predictable returns through either rental income or property appreciations. The risk is lower compared to VC funds, but the returns are also more modest and gradual. Of course, these investments are heavily influenced by location and market conditions. And in Turkey, this sector benefits from ongoing urbanization and infrastructure development. In terms of investment strategy, private equity and venture capital funds, of course, focus on diversification and timing. Investing in established and strong market players in private equity provides lower risk and greater returns for our investors. But investing in a range of startups with hope that few big winners will deliver outsized returns in at least 7 years. So risk is higher, but actually the gains are higher too in venture capital. And real estate funds are more stable and they are for steady income and long-term value creation. So each fund comes with, as I said, its own set of advantages and disadvantages.
Working in venture capital, from what I've learned over speaking with so many people, you really need good stress control. So you really need to be able to control the stress that comes with that job, because, for example, you not only run funds for Arz Portfoy, but you also run funds for other organizations as well. And with that, there's a relationship of trust. There's the calculation of the risks and the returns that they're going to get, the people that you make these deals with. So what do you have to say about that? What kind of collaboration does Arz Portfoy provide in venture capital?
Well, as I said, in the beginning, we do have some different funds running together with different institutions. So one of the standout benefits we offer at Arz Portfoy is access to our extensive pipeline. We spent years, as I said in the beginning, building strong relationships and networks. So when institutions partner with us, they are not just getting a fund manager, they are also getting access to that great stream of high potential investment opportunities that we have already vetted. And we don't stop there. We also offer co-investment opportunities for these institutions. And on top of that, we provide a comprehensive counter check on both financial and legal aspects. That's very important as well, because if you're a startup, once you have started, you mostly focus on what you want to deliver. But there are many areas that you also have to take care of. And in that sense, we help them a lot. And we help both startups and also the investors too. So we are committed to going above and beyond in delivering value to its partners, to startups as well. And I believe our strong track record speaks to our ability to deliver on these promises, at least till now. And hopefully we will continue to do that.
Now, Murat, I want to move on to something more specific. Impact investment. It's quite a big thing now, and a lot of investors are eagerly wanting to move into this industry. And at the Impact Investment Summit that was organised by EYDK and held in Istanbul in 2024, you said, and I quote, "I believe that by 2030 there will be no investment that is not an impact investment." Can you elaborate on this? What did you mean when you said this?
Yes, absolutely. And actually, thank you for bringing up that quote. When I said by 2030 there will be no investment that is not an impact investment, I was actually emphasizing the growing trend that every investment decision will be made with consideration for its broader impact on society and the environment. I believe maybe there will be a time in the next 4 to 5 years, a difficult time for the whole worldwide. But after that, especially, we are moving toward a world where financial returns and positive social outcomes are not seen as mutually exclusive, but as interlinked. Now, within the context of Arz Portfoy, we fully embrace this philosophy, and our approach to social innovation, social entrepreneurship, and social venture capital is central to how we operate. And as you know, social innovation refers to new strategies, concepts, and ideas that meet social needs in a better way than existing solutions. And at Arz Portfoy, we actively seek out and support these innovations. And in sectors like AI, fintech, aerospace, where technology can be leveraged to establish actually a meaningful challenge. And when you look at the social entrepreneurship, this takes it a step further about creating ventures that are explicitly designed to solve social issues. We are just not looking only at the profit margins. Also, we are asking how does this business improve lives and how does it contribute to a more sustainable world. And finally, social venture capital is about providing the necessary funding to scale these social innovations and entrepreneurship efforts. We are very committed to directing our capital into ventures that goes with this impact alongside profit. And this dual focus, we believe, not only drives sustainable financial returns, but also fosters a healthier, more equitable world. And in summary, by 2030, I'm still saying the same, the very nature of investment will evolve and every investor will be an impact investor. even if they realize or not.
How would you evaluate the current development of impact investment in Türkiye within the investment ecosystem? Are we there yet? Or how long do we have to go?
Well, I think it's a great question, and I believe it will take some time. But the development of impact investment in Turkey's investment ecosystem has made significant strides recently. Government support and incentives have been key in driving investor interest. The market is growing quickly with lots of money going into projects that provide financial returns and also have positive social and environmental impacts. Sectors like renewable energy, sustainable agriculture, education and healthcare are leading this growth. And the ecosystem for impact investment is expanding too. Organizations such as the Turkish Innovation and Entrepreneurship Foundation are actively supporting impact-driven initiatives. International collaborations are bringing in best practices and more capital. And we've seen inspiring success stories, particularly in social enterprises, focusing on clean energy solutions. These examples are encouraging more investors, of course. And of course, there are challenges, such as raising awareness and developing skilled professionals in the field. But I believe we will surpass most of these issues and problems, and there will be more growth opportunities in Turkey in this sense. And looking ahead, the future of impact investment in Turkey is very promising, I believe.
And now moving on, Murat, as we mentioned earlier, you're also the Vice Chairman of the Venture Capital Council of the Union of Chambers and Commodity Exchanges of Turkey. Can you tell us about this council? What does it do and what kind of contributions does it have to the sector?
Yes, and I'm a board member also at Turkey Capital Markets Association and also in the Venture Capital Council as well. So both are focusing on enhancing Turkish investment environment. Turkey Capital Markets Association is composed of capital market boards licensed members of asset management companies. But the Venture Capital Council includes globally established VC firms that focus on Turkey as well. So as you said, I am a board member in TCMA and also vice chairman in the, let's say, VCC. So these both organizations are significant organizations. They are established to promote the development of Turkish capital markets. The Turkish Capital Market Association represents intermediary institutions, asset management companies, and other entities involved in Turkey's financial sector, and till now has a pivotal role in fostering supportive environment for venture capital and private equity investments in Turkey. By working together with the Capital Markets Board of Turkey, which is actually helping the sector a lot, especially in the last, I would say, 10 years, because the communique has been released in 2014 for the venture capital side. CCMA contributes to the creation and refinement of regulations, helping the capital market boards of Turkey that addresses the unique needs of VC and PE investments. And when you look at the Turkey Venture Capital Council, it's an important organization that brings together venture capitalists, entrepreneurs, and industry stakeholders to support the growth of the startup ecosystem in Turkey. As you said, it was established by the Union of Chambers and Commodity Exchanges of Turkey, which is a great organization. This council plays a vital role in supporting entrepreneurship across Turkey through events like Venture Capital Anatolian meetings and similar meetings all around Turkey. It conducts annual evaluations of the venture capital sector and discusses future strategies. And also, it's instrumental in promoting the startup ecosystem's growth by supporting entrepreneurs, facilitating investments, and advocating for policies that drive innovation and economic development in Turkey, I would say.
So in general, how would you say Turkey got to the stage that it did here? What kind of regulation changes do you think were made that were really important to allow the sector to grow?
Thank you. Well, I think it's a great question because it's been now 10 years. The groundwork for venture capital in Turkey was actually truly laid in early 2014 with the introduction of the Communique on Venture Capital Investment Funds. And unlike the global standard, the capital market boards created an instrument that was far more flexible and tailored to Turkey's unique capital and risk structure, I should say. And since then, as you said, with significant feedback from the industry and support from our ministries, as well as the Presidential Investment and Finance Office, we've seen substantial revisions Today, I should say we probably have one of the most liberal and flexible venture capital frameworks in the world. And following this, the public sector played a crucial role, especially through the Fund of Funds initiatives. The Ministry of Treasury and Finance, development agencies, and the Turkish Development and Investment Bank provided essential capital to the sector. And the government's catalytic role here has been vital, and new programs are set to be launched soon, as far as I hear from them. And another significant boost, I would say, came from encouraging pension funds to invest in venture capital funds. As you know, globally, pension funds are heavily involved in venture capital due to the perfect match in risk, return, and duration profiles. So it was crucial for our pension fund managers to get acquainted with venture capital, and this initiative was much needed lifeline for the sector as well. And moreover, significant tax incentives were offered to both individuals and corporations who are investing in venture capital funds. And given the inherently risky nature of these investments, incentivizing investors was essential, and these steps have led to notable growth in the sector in the last years especially.
And to finish off, Murat, I want to ask you about your general opinion on the growth of VC investments in Turkey, but also in comparison to Europe. Where will the sector reach in the next couple of years? Do you think we'll see an enthusiastic boom, or is it going to be, a bit difficult with the current economic situations that we're all facing?
I believe in the coming years, also, I have to be optimistic about as well as an asset manager too. But I believe in the coming years, venture capital investments are expected to experience significant growth. Because even though we have grown a lot in the last several years, we still have a lot way to go, especially for Turkey. And I believe the region will follow this in Europe and in the near region. So in Turkey, the venture capital landscape has been rapidly evolving, driven by a favorable regulatory environment and increased support from government initiatives as well. The country's strategic location, coupled with young and a tech-savvy population, makes it an attractive destination for startups and for investors as well. And when I look at Europe's VC scene, I believe they are also set for continued expansion, particularly in the tech sector and deep tech sector. Cities like Berlin, London, and Paris will probably remain central hubs for innovation, as well as Istanbul, of course. But as I said, I think there will be a growing focus on sustainability in line with Europe's broader policy goals such as the European Green Deal. In my opinion, globally, venture capital is on the verge of reaching new heights, especially driven by the rise of AI and robotics and other deep tech innovations. These technologies are poised to disrupt various industries, I believe a lot of industries. So there is a new wave coming actually in the tech side that will disrupt nearly everything in the world. And additionally, institutional investors are expected to increase their allocations to VC funds, bringing more capital into the ecosystem and expanding the potential for large-scale investments. So overall, the next few years will be transformative for venture capital, with increased capital flows, a focus on sustainability and impact investing, and the broadening of the global investment landscape.
Brilliant, Murat. Thank you very much for today. It's been a pleasure to have you here.
Thank you very much for having me here.
In today's episode with Murat Onuk, we speak about Arz Portfoy and the different funds they run. Murat talks about the risks and opportunities that different funds bring and the extent to which the VC sector is developing in Turkey. You can find our podcast on all streaming platforms, and for more updates and information, follow Invest in Turkey on social media. Stay tuned for more episodes where we'll be talking more about investment in Turkey.